The discounts are back to 20%. You have 4 days, 27th, 28th, 29th, 30th. Don't wait. Go get your discount. Join us and crack your CA exams. So hello and namaskar, and this is a session that I will be taking about an amendment made by Finace Act 22 in section 43B. And this is to override one of the judgments given by the Supreme Court in 2021. And I have been getting a lot of requests that you should be taking some sessions just in English so that students from South India can also join in and listen to it. So this one I will be taking entirely in English. So, we've seen a practice that sometimes what happens is there are interpretations taken by courts which are not in tune with legislative intent. Now, 43B, if I just take you through what 43B essentially has been saying, I'm sure we all know 43B says that there are certain deductions which are allowed only on paid basis. And one of the more important ones was there is interest. And the interest is to banks, or to financial institutions, or to NBFCs. All of these were added over there. Now, the basic intention was that there were assessees who were claiming a deduction for interest on accrual basis, but the banks and the NBFCs were not getting their interest. So as to avoid the case where the banks do not recover their taxes and the assessees are enjoying themselves by claiming their deductions, the government came up and added these in 43B. And 43B uses the word loan or advance, which means if there is a CC limit or a cash credit limit, that will also be covered by the provisions of section 43B. Now, the basic idea was that the bank should get their money, only then the assessee should get a deduction. I think this everyone knows. Now, remember there was a case, what people had started doing was that if a person had a, let's say, CC loan, if a person has a cash credit account and the interest due over there, beta, let's say was 4 lakhs. Now the assessee faced a dilemma. They did not have the money to pay the interest but wanted to claim a deduction. So what did they do? They now came up with a brilliant idea, met the branch managers and got themselves sanctioned another loan. So they got themselves sanctioned a term loan. And after getting a term loan sanctioned, they transferred the money from this loan to the CC loan and claimed this as paid for the purposes of section 43B. And we know that law caught hold of this, I wouldn't call it planning, manipulation, and put a stop to this and said that converting of a outstanding interest into a new loan will not be treated as paid. Therefore, 43B will not allow it. Now, we will now read this judgment of the Supreme Court in 2021 and then go and look at the corresponding amendment by Finace Act 22. Now, Aqua Technologies Limited versus CIT 2021. Supreme Court says, can issue of debentures in lieu of interest accrued, and payable to financial institutions be treated as actual payment as contemplated under 43B of the Income Tax Act for allowability as a deduction while computing business income. Now, just to understand the facts, what has happened is there is a company, let's take X Limited. Now, there is a bank or NBFC or financial institution, the provisions will remain the same, and the company, let's say, has an outstanding interest. So there is outstanding interest. Now, the company has an outstanding interest of, let's say, 40 lakhs, and the banks and the company are negotiating the closure of this deal, and maybe they are, looking at this entire loan arrangement and trying to settle it, reach a stage where the interest is deemed to be paid or is recovered by the bank from the company. The company says, we don't have the cash. Company क्या बोल रही है? हमारे पास cash नहीं है. We don't have the money. So the company comes up with a brilliant idea. They say, what we will do is, we will issue debentures to you worth the amount of interest, which is 40 lakhs. And the bank says, okay, fine. these debentures, let's say, are redeemable after 3 years. So the bank says, fine, you issue us debentures. And the best part, the bank treats this as a receipt of interest. So the bank has received debentures, which is basically kind of deferring the payment of interest. Debentures are not redeemable immediately. So the debentures are redeemable at a later date. So the bank treats it as a receipt and the company claims it as a deduction, saying that 43B is fulfilled. 43B is fulfilled. Now, what is the judgment that comes? So, this is the judgment given in the Supreme Court. देखें क्या बोल रहे हैं? The issue of debentures by the assessee, the company, was under a rehabilitation plan to extinguish the liability of the bank interest altogether. In the assessment of the bank, for the assessment year in question, the accounts of the bank reflected, the accounts of the bank reflected the amount received by way of debentures as its business income. The interest was actually paid by the assessee by issuance of debentures, which extinguished its liability to pay interest. Now, the Bare Act, Explanation 3C, which I will just take you through. Explanation 3C. चलिए, एक काम करते हैं. Let us first go and read the Bare Act and then we will understand what the amendment is. Now, 43B, this is the Bare Act, has 3 clauses, D, DA and E, all relating to interest. See, I have only taken the clauses that are relevant to interest. Now, let's read the Bare Act. As a chartered accountant, it's important to understand how the amendment has been reflected in the Bare Act and what the judgment said and how has it been overridden. Now, the first part says, Clause D, and please remember the clauses so that once we go and look at the amendment, we understand what the amendment says. Any sum payable by the assessee as interest, and it says on loan or borrowing from any public financial institution, state financial corporation, or state industrial investment corporation, in accordance with the terms and conditions of the agreement governing such loan or borrowing, is restricted by 43B. Okay. So over here, basically, what is covered is financial institutions. Then it says any sum payable by assessee as interest on loan or borrowing from a deposit taking NBFC or a systematically important non-deposit taking NBFC in accordance with the terms. So over here, what is covered is NBFCs. Any sum payable as interest on loan, and now comes the word advances, from scheduled bank, cooperative bank, or other than primary agricultural credit society or primary cooperative agricultural and rural development bank in accordance with the terms and conditions. So here we have is banks. And why is the word advance used only here? Because advances are only from banks. Then he says shall be allowed irrespective of the previous year in which the liability to pay such sum was incurred by the assessee according to the method of accounting regularly followed by him, only in computing the income referred to in 28 of that previous year in which such sum is actually paid by him. So the section says you will get a deduction only in the year in which you paid. Okay. Then there is a provided that statement. Let's see what it says. Provided that nothing contained in this section shall apply in relation to any sum which is actually paid by the assessee on or before the due date applicable, in this case, for furnishing the return of income under subsection 1 of 139, due date se pehle, in respect of the previous year in which the liability to pay such sum was incurred as aforesaid and the evidence of such payment is furnished along with the return. Now, I'm sure while reading the Bare Act, we sometimes wonder, okay, kya likha hai? Arey, it's the same thing. In the section, he says, I will allow you the deduction in the year in which it is paid. So if I'm looking at previous year 21-22 and there is interest due here, but is paid on 31st October 22, as per the paragraph under 43B, this will be allowed only in 22-23. However, provided that the condition that if it is paid, if such sum is actually paid by the assessee on or before the due date applicable for furnishing the return of income in respect of the previous year in which the liability to pay such sum is incurred. The liability was incurred in 21-22. And if the assessee is X Limited, is it paid before the due date of the year in which the expenditure is incurred? Yes. Therefore, as per the proviso, it will be allowed in 21-22. देखो ऐसे पढ़ते हैं मेरा, right? Now, There is explanation 3C, 3CA and 3C and 3D applicable to. 3C is applicable to clause D, 3CA is applicable to clause DA, and 3D is applicable to clause E. So over here we've done D, DA and E, and all of them are similar, exactly the same. Let us go and read. For removal of doubts, it is hereby declared that a deduction of any sum being interest payable under clause D or DA or E shall be allowed if such interest has been actually paid, and any interest referred to in that clause which has been converted into a loan or borrowing shall not be deemed to have been actually paid. So if we go and look, when we are talking about the interest being converted into a loan, explanation 3C, D have actually 3C, CA and D have said that this is not deemed to be paid, which means it will not be allowed as a deduction. Now, there is an amendment here. Or debenture or any other instrument by which the liability to pay is deferred to a future date shall also not be deemed. Why is this coming in? This is coming in because the judgment here says, look at this. The judgment said, and this is before the amendment came, to section 43B clarified that interest remained unpaid and has been converted into a loan or borrowing shall not be deemed to have been actually paid. Therefore, explanation 3C, which was meant to plug a loophole, could not be invoked in this case where debentures were issued in lieu of interest. The interest is therefore deductible. The Supreme Court said this is allowed. You can claim a deduction by issuing debentures. Finance Minister did not like it. They inserted a clause here, or debentures or any other instrument where which the liability to pay is deferred to a future date is also deemed not to be paid, which means this can no longer be claimed as a deduction. Now I'm just going to read the memorandum. It's always nice. See, when the finance minister makes an amendment, there is a memorandum they give with the finance bill as to why, as to the thought process of legislature that is being introduced here. So we are going to read that explanatory memorandum. Section 43B, whenever the finance minister introduces a new section or an amendment, they will first define existing law. So existing law ke hisab se, they have just defined over here that 43B has explanations 3C, 3CA, 3D and so on. Now they say, however, finance minister is talking to us, however, certain taxpayers are claiming deduction under 43B on account of conversion of interest payable on an existing loan into a debenture on the ground that such conversion is a constructive discharge of interest liability and therefore amounted to actual payment, which has been upheld by several courts, which we are obviously referring to the judgment we've just done. Now, finance minister says, such interpretation is against intention of legislation. The section was introduced to curb the mischief of claiming deduction by the assessee without paying interest to banks, financial institutions, NBFCs. Section 43B makes a departure from other sections as indicated by its non-obstinate clause. Under the provisions of this section, conversion of outstanding interest into debentures is not an actual payment and cannot be claimed as a deduction. In other words, in view of the above, they are amending explanations to add the words, like we just did, conversion into debenture is also not allowed. It's always intriguing to follow how the thought process of law changes, and I find it very interesting that direct taxes you have to be up to date with the latest thought process of legislature, because you guys are the ones advising clients on whether they can get a deduction, whether the receipt is taxable as business receipt or not. So keep learning, keep growing, and little by little we keep learning a lot.